Welcome. Thank you so much for being here because if you're watching this, you are a Patreon supporter. And I just want to start this out by saying how much I appreciate you. It's really awesome that there's people out there who are willing to support and help so that I can spend more time on the channel and produce better content for everyone. So, really appreciate you and just want to start out by thanking you all. Now, what this video is going to be is some content that I'm not going to show on the YouTube channel because I think that it's good to have a little bit of exclusive content to really thank the Patreon supporters. And it's nothing crazy or super special, but just some tips and tricks that I utilize that might be able to help you out with your trading. So maybe you already do some of these things or know about these things, and if that's the case, then that's great. But I think these things can help a lot of people. So I just want to show these to the Patreon supporters and kind of show my gratitude and thanks to everyone. So let's start out on this with some examples of what I'm talking about. So what I'm going to be getting into is kind of things that you can add in, and this is really going to work well with using hidden divergence as well. So what I'm going to be talking about is higher time frame hidden divergence is spotted. Then you can utilize lower time frames. So let's say the 30-minute time frame, bring it down to the 5-minute time frame, or even the 1-minute time frame in some instances. And you're going to be looking for not only hidden divergence on the 30-minute, but then you're going to go down to that lower and look for normal bearish divergence. So you're going to combine normal bearish divergence on a lower time frame with hidden bearish divergence on a 30-minute time frame or higher time frame. Doesn't matter what time frame, but you get the point of what I'm trying to say. Higher time frame hidden bearish divergence, lower time frame normal bearish divergence to get you a fantastic entry and add confidence to your trade entry. Another thing that we can add on to that is the trend and how close is the price getting to those exponential moving averages. Okay, so I'm going to go into some examples here and show what I'm talking about. And so hopefully you can add this stuff into your sort of trading toolkit and maybe get some better results. Another thing is a certain pattern that I want to talk about, and I'm going to get to that later, but I'm going to start out with this particular thing that I just mentioned. All right, so let's get into the examples here. So first example is very recent, and I'm on euro dollar, and notice I'm on the 30-minute time frame. I'm going to draw in the hidden divergence. Price is under both the 250 exponential moving averages in a strong downtrend, and we get this sideways period here. When you draw in the hidden divergence, you can say, oh, okay, we get a really strong hidden bearish divergence here. But a lot of people are really scared to enter. All right, so you need to kind of add in a few things. And I'm going to show you a few examples of this particular thing occurring. So let's go down to first a 15-minute time frame and see if we can look at anything. So, I don't see any bearish divergence, normal bearish divergence here. So I'd be still, maybe if you weren't used to your strategy, you might still be kind of scared to enter. Let's go down to the 5-minute. Okay, so let's zoom in here and take a look. So as you can see, if we look at the RSI and the MACD, we have regular bearish divergence. So not only coming from here to here, but if we look at the histogram, we get right here, we get an even smaller one right here from here to here. So we have a few instances of bearish divergence on the MACD where we get higher highs on price, but we're getting lower highs on MACD and histogram along with the RSI. Let me just get that out of the way there. So we can also take a look at not only from this peak here to this peak over here, but we can also take a look within this peak itself from this peak here to this peak here. And if we just look at that alone as well, we can get that regular bearish divergence. So you can combine your higher time frame hidden bearish divergence with regular bearish divergence on a lower time frame and get superior entries. There's a couple ways you can do this. You can either wait for your 30-minute time frame signal. So in the examples I've shown on my channel, it would be a stochastic cross down on the 30. You can also have another way of doing it. Like you could look at this 50-period EMA and you could wait until price closes below it on that 30. So you could get your entry right around here. So if you get both that stochastic cross down on the 30 and that close below the 50 EMA, plus all that bearish divergence on the lower time frames and your hidden bearish divergence on the 30 and the overall downtrend, you can make a pretty good case for a short position entry and have some good confidence. Another thing would be basic structure. When you see price move, typically you get pushes down and strong moves followed by sideways corrective movement. These couple examples I'm about to show very similar movement on them, because this is a really how hidden bearish divergence shows up a lot of the time, is when you get these sideways sort of corrections, kind of like a 1, 2, 3. Sometimes you get a 1, 2, 3, 4, 5 or something along those lines, where it's just kind of zigzagging sideways. Don't confuse that with Elliott wave. That's not what I'm counting. I'm just saying how many waves are in this sideways correction movement. So just try and add additional things into your system so that you can get superior entries and have some confidence that this thing actually is about to drop and you're not terrified that this thing is about to shoot up and take out your stop losses. Now, you can also do a lower time frame entry if you don't want to do those 30-minute time frame entries that I just talked about. And you can take a look at the 200 EMA on the 5-minute chart. You can talk about, okay, maybe we just wait until this low is broken so the trend is reversed. So we could say, okay, so we have higher high, higher low, higher high. Once the trend is reversed, and by definition a trend is reversed when you break this low. So you just wait until the low is broken and closed below. So that is confirmation that both the 200 EMA on the 5-minute has now been broken down, and you had the trend reversed on the 5-minute with breaking this low. So now we have a lower low, okay? So there's a few things you can do to kind of really make a strong argument for price going where you think it's going to go with your 30-minute hidden bearish divergence. So hopefully all that stuff that I just talked about, it makes sense to you guys and you can utilize it yourself. And you can do this with different time frames. So if you're on the 4-hour, you can come down to the 30-minute, or just for an example, I don't know that that's the exact perfect time frame flip, but you get what I'm saying. Higher time frame and then go down to the lowers for a nice entry. So utilizing a bunch of different things where you can get a really nice precise entry and have some more confidence. And another thing that I don't talk about is taking more than one entry. So you can start out with a really high risk entry and small position size where you are getting this really nice divergence, bearish divergence, normal bearish divergence, I should say. And you can get a really amazing entry using this tactic where you see that the MACD and signal lines have made a lower high. There's this gap right here in the histogram, and you're spotting all that higher time frame confirmation. You can take a small position of your short right at the top area here and then wait for confirmations to add to your position. So that's another thing that I wanted to address in this and talk about. but obviously you're going to have to do your own testing. I'm just giving you guys ideas and concepts that I utilize, and I want you to make sure that you don't just blindly do these things. All right. So let's go to another example, and it's actually right before this one. I'm going to show a few examples. So I'm going to actually stop the video and then cut to a different part of the chart or a different pair just to show multiple examples, okay? So this one, I think this was the one where it's going to be utilizing the 30 and the minute time frame, or maybe we'll see. We'll go zoom in and kind of analyze it as we go. Now, this one here, you have strong hidden bearish divergence here to here. And if we draw it in down here, you know, it's really clear as day. And you can see it's coming right up to that 50 exponential moving average. And, you know, that's one sign that, okay, the pullback might be getting close to an end. If we're in a downtrend, you know, it's a pretty typical thing to come up to the 50 exponential moving average before continuing a trend. So that's the first thing that you can notice. You notice the hidden bearish divergence on the 30, and you want some extra confirmation and confidence in this trade, as I was showing you on the previous one. So we can start by going down to the 15 and see if we see anything that might indicate, no, it's still just really strong. You know, we get into the overbought area on the 15 here with the RSI, but not too much of a difference from the 30. Let's go down to the 5. See, where were we at? Over here. What can we see? So on the 5, we don't get much either. So it's getting really overbought here, and that's about it. That doesn't mean too much on its own. Let's go to the 3-minute and just kind of go through these different time frames until you actually spot the regular bearish divergence. So once again, nothing. Let's go down to their 2-minute. And doesn't look like anything on this one either. Let's go down to the 1-minute. Let's find our spot here. I wish it just kept me right here. It's all right. So now this is where we start to see the regular bearish divergence. So let's take a look at the RSI here. You can see that our peak is right here, and then this peak right here is much lower, but we get a higher high, and that's actually at the exact top of this. So you really utilize even the 1-minute time frame to try to spot the perfect time to get that small entry, and then you can use those other time frames to use EMAs or look for breaks of the lows to reverse the trend, or you know what I'm talking about. The lower time frame uptrend, you're looking for that to reverse to continue the longer time frame downtrend. All right. So that is the other example, and once again, I will note that these happen a lot on these sideways sort of zigzaggy corrections, along with these sort of sharp spikes. So a lot of the time when you find hidden bearish divergence or hidden bullish divergence, it's a sharp spike that then people fade and crumbles. So these sharp spikes, I like to think of them as liquidation spikes or stop hunter spikes or FOMO spikes. So you can call it whatever you want, but often when you are trading hidden divergence is caused by these sharp spikes in price that then crumble and fail and continue the trend. So just something to note with structure, how it normally looks, and then adding in those additional things to get the perfect entry and have more confidence in your system. So I'm going to change screens, go to a different pair, see if I can pull out some more examples, and also talk about that other pattern, and that will be really quick. The pattern that I want to talk about, it's not super common that you get the pattern, but it's very, very accurate when you do. So I just want to talk about that with you guys as well. So be right back. All right, so one last example on euro dollar on the 30-minute time frame here. You can see there's the hidden bearish divergence, and we're going to break it down. So on the 30, you can see that it's below both the 50 and the 200. So we're going to go into the lower time frames to see if we can add some confidence to this trade. So let's start with the 15, I should say. Now I have to find it again here. Here it is. So on the 15, you can see it's pulled back into the 50. So you can say, okay, well, this one's pulled into the 50. You can also say, hey, we got bearish divergence, regular bearish divergence on the RSI here. So lower high on RSI, higher high on price. Another thing you can say here is, okay, if you're a price action type of person, well, this just retested this low here. So you can say, all right, well, we just got a breakdown and then retest with all these bearish factors added in on that retest. Now let's break it down to the 5-minute. And on the 5-minute, you can just kind of notice that it's at the 200 EMA on the 5-minute. So using this multi-time frame analysis, you can really get a nice clear picture and allow yourself to take a confident position and not fool yourself into missing out on good trades. I mean, at the end of the day, it's all down to your consistency and ability to stick to the system. So adding in all these different things might help you with your confidence when it comes to your trades. But anyway, let's go to another one. All right, so another example on Aussie Kiwi, and I actually want to zoom out on Aussie Kiwi and just tell you guys, if you're not trading Aussie Kiwi as a trend trader, you're doing it wrong. I mean, you can just scroll back, but this thing has had some beautiful trends. This is as far back as the 30-minute will let me, but just for quite some time, this thing has been giving and delivering beautiful trends with my strategy. This has been really, really good. So pretty much the best out of any pair. But anyway, let's get back to the actual example. So there is some hidden bearish divergence on this one. And there's a nice sort of mix of things that you can take a look at. Well, obviously, the hidden bearish divergence is the first thing that you spot, along with the trend direction, which is below the 250. So we get a higher peak on RSI, but a lower high on the price. And once you have seen that, you can also then keep waiting, because this candle would have been a strong green candle and you would not have gotten any entry signal yet. But once you see this candle close as a strong rejecting red candle with a huge wick right off the 50, you can definitely get some confidence on this position. Let's zoom down into the lower time frames now. So we don't see any bearish divergence, no normal bearish divergence on this one. You can only notice for the 15 that there was a try to push above this 50 and then a break back down below it. So let's go to the 5. Five gets overbought, but doesn't look like there was any Doesn't look like there was any divergence. No normal bearish divergence really, but I believe the 3-minute does present that. You can see the rejection off the 200 on the 5-minute. Here we go. So on the 3, that's where we see that overbought bearish divergence. So you can combine that with the signal of the higher time frame and the other things that you have noted while going through the time frames. All right. So I'm going to find another example and talk about it, find a couple more, and then I'll talk about that pattern I was talking about. The pattern, you know, it's kind of rare to find a good example of it, but it works really well. So I just want to talk about it. It's pretty brief and simple. All right, so here's another example on Aussie Kiwi 30-minute time frame. You can see that price is under the 200 EMA and there's been a sharp pullback in the trend. This creates the hidden bearish divergence with the RSI, lower low on price, higher high on RSI. Then you can go down to the 15 and look for additional confirmations. So what do we see here? Well, we have the RSI going overbought and creating regular bearish divergence. Higher high on price, lower high on RSI. So it's a strong indication that this thing is ready to continue in the downtrend. All right, so here's a recent one on pound US dollar, and you can see the hidden bearish divergence on the RSI here. We got the lower high on price, higher high on the RSI. Then if you break it down to the lower time frame, you can start to try and find some regular bearish divergence on the peak. Doesn't look like this one quite gets it on the 5. Let's check 3. And there it is. So we get strong bearish divergence between this peak and this peak. Strong rejection candle right at the top there. So you can really combine these things to get nice, confident entries with your trading strategy if you do trade the way I trade with the trend using hidden divergence. All right, so that is it for the examples on the hidden divergence. I think I made it clear enough how you can combine different things and showed a bunch of different things that you can add in that I haven't shown on the actual channel. So hopefully you guys appreciate that. Hopefully it's not everything that you already know and that you already use, or maybe if you already knew about it that you haven't been utilizing it or haven't been doing it right. I don't know. But anyway, I just hope that it helped someone. And I just want to show one pattern that is very high probability, and it's kind of hard to find a clean setup with it, but when it does happen, you can utilize it to take entries. And I actually did take one of the entries with it recently, and that's the one I want to show you. All right, so let's talk about the pattern I have been mentioning. And this pattern is nothing new. The pattern itself isn't that special, as Elliott wave traders and people who have been in the trading sphere for a while will already know about this pattern. But the way to trade it that I'm going to talk about with much stricter rules to follow is the difference here. Okay, so first thing is I'm just going to outline the pattern itself, talk about what the pattern actually needs to look like in order for it to be valid, and then talk about how you actually determine if you can take an entry on it. So the first thing is, if you haven't already spotted it yet, we're looking at a 5-wave Elliott impulsive move. So we got the 1, 2, 3, 4, 5 waves up. And what you first need to make sure of is that this is going counter trend. So the higher time frame trend is down, this impulse is going up. So it's a pullback in a downtrend on the higher time frame. So that's the first thing, because you're going to be looking to short this and go in with the higher time frame trend. Okay, so the next thing is you need to make sure this pattern is clean and a beauty, just like the one I'm showing you. And they aren't this clean and beautiful most of the time, so you're not going to get trade entries with this very often, but it's just kind of an extra tip that you can use if you're not spotting hidden bearish divergence, which this one did not have hidden bearish divergence on the 30-minute time frame. So this one here, it's a beauty, and the reason why it's a beauty is because you have a wave 1 that is very similar to wave 5, and then you have a strong wave 3 that's much longer than both 1 and 5. So you're looking for these beautiful, nice, symmetrical looking patterns. 1, 2, 3, 4, 5. It should be very clear, clear as day, no mistaking it, okay? So that's what I'm talking about when you want to have a nice, clean pattern. You should not be mistaking it for something else. The next thing you need to look for is on the RSI and the MACD, and that is regular bearish divergence. So we're going to draw it in here. Higher high on price, but lower high on the RSI. Same thing with the MACD. We're getting that bearish divergence, strong bearish divergence between the wave 3 high and the wave 5 high. So you can take a short position on this and go in with the higher time frame trend, okay? So remember, we're not trying to counter trend trade. We're still going with the trend and trying to short it here. So you can take a look on the 30 and say, hey, this 5-wave move that has bearish divergence is now hitting the 30-minute 50-period EMA. That's a pretty good entry. So that's just a pattern that you can spot on lower time frames and then use a higher time frame to confirm the overall trend direction, and use some higher time frame EMAs to confirm that the pattern is good and that you're getting in on the right side of the overall trend. A lot of Elliott wave traders would have you buy the dip right around here on the pullback after that 5-wave, because they would say if there's a 5-wave impulse, then you're looking for another 5-wave impulse after that dip. But you know, corrections also have 5-wave moves in them, and I don't like Elliott wave, so I'm not going to act like I know a ton about Elliott wave. I just know that trading this particular pattern, this particular way, has worked well for me, so I just wanted to share it. And you know, maybe if you notice this pattern and do some testing, you can utilize it in your trading. But anyway, that is the special stuff that I wanted to talk about and kind of give just the Patreon people. Hopefully some of that stuff, if anything in there was helpful, I would be happy. So yeah, that's pretty much it for this. I just want to say thank you so much to anyone who is supporting me on Patreon. You know, again, it means a lot, and I should be able to really pump out much higher quality content and actually have time to properly do things like the FTMO challenges and small account challenges, where I actually have time to trade on them and get lots of trades in on them to give them a fair chance of working. So on my previous FTMO challenge that I was doing on the channel, I just didn't have enough time to find the good signals. I wasn't trading at good times of the day because either I was using my personal account, or I was with my wife doing something, or running errands, or working, or whatever it may be that is not trading the FTMO small account challenge. So anyway, it should be a big help in being able to produce really quality content like that and actually do it right next time around. So yeah, thanks guys, appreciate ya. Catch you later.